Okay, gang, welcome back. Rob here with you. I just want to wish each and every one of you, from me and my entire team, a happy new year to each and every one of you. Listen, as we go ahead and we kick off, we just had an incredible number of you take advantage of that really special offer we had for you, which of course is now gone, but we did have for you to go ahead and join our student family. And so just a reminder for each and every one of you that went ahead and joined us, we went ahead and you have this awesome discussion forum here, so make sure you're going and taking full advantage of that to ask us all sorts of new questions, and I already see new ones on the board there. So make sure you're using that. It's a great direct access to me on a daily basis. It's the next best thing to being in the live trading room. As we go ahead, we take a look at several different instruments tonight. We'll start off with the stock index futures. So the whole thing about stock index futures was really what I shared with you from the videos the other day. It was the same exact concept. We knew we had this whole concept of light volume taking place. We had mentioned that over and over. In fact, let's just take a look at the volume from the last several days. You'll see this was the last pre-Christmas time frame here, and then this was Christmas Eve, Christmas right up till New Year's right over here. Well, you can see at no time do we get above that magenta line that I had drawn for you until today. We finally got above that. So as volume came back in, you remember all during this time I said, look, it's great that it's going up and everything, but watch out when the volume returns, because when the volume returns, then we're likely to go ahead and see selling. That's exactly what we went ahead and saw happen here as the volume came back in today. Okay, so go back and watch last week's worth of volume charts or videos and understand a little bit more about what we were looking for there. So as we then zero that into the actual day, what we were faced with was we were looking for all four of the stock index futures to push down below the important speed lines. So now, and as far as speed lines, for all of you that took advantage of that offer the other day, you should have access to those speed lines now, so you can go ahead and follow along with this. Well, so as we go ahead and we take a look, what we had going well for us was that the S&P, the Russell, and the NASDAQ all were down below their speed lines this morning, and nicely so. The problem we had this morning off the U.S. Open is that while we had the Russell and the others going down, we had this initial jerk reaction to the downside, which got us just a little bit below the speed lines, just a hair below it. I'm like, okay, gang, we got to keep going down. And this is what we were talking about back, at that time. In fact, this was still only 22 minutes into the U.S. Open when we, kind of went back and redrew this. But into the U.S. Open, we were looking for this to go ahead and continue to drive down so that we could actually really just get real aggressive with the shorts. Well, the problem was we couldn't make that happen. We couldn't continue down at the time. So what ended up happening was we started seeing with the other stock index futures, and that's why even though they looked much better off this morning, this is the chart for the Russell, looked like a gorgeous chart to short. I'm like, hey, we can't do that. The risk is really high that we start going back up here because the sells aren't selling on the Dow. It's holding too well. And we saw that as we go, throughout this morning for a while. Look at that. It actually then, sure enough, went back up. Well, finally, later in the day, the Dow did start to roll over, which led to, so here's what happened in the meantime. See, the Dow just couldn't push to the downside. So no sooner did you think it was safe to short things like the Russell, the S&P, and the NASDAQ, and you get these spikes back up. So I kept warning people away from that. Well, finally, we ended up getting the Dow to break down here, and that led to this really nice push then in the other instruments. That's what we were looking for, okay? So just as we kind of walk through that. Now, let's go ahead and take a look at, armed with that information, when we're talking about looking for those four stock index futures to come together with volume, that's, along the lines of what we're talking about. A couple other instruments I want to look at going into tomorrow here with crude oil. Crude oil is playing that magic $100 to $95 to $100 level. You guys have seen me over the years talk about this over and over and over again, and it just continues. That 95 level, the 97.50 level, and then the 100 level, and then what we need to look for in the middle at certain levels to break to make us want to go ahead and trade that. Well, so we've gone ahead now and we've pushed almost all the way down to 95. So what we're going to be looking for next here is, do we start to actually break below the 95, which could, of course, set us on a little tumble to the downside here, or do we go ahead and we start to push back up towards the 95 level? So I'm going to be looking for signs that we're pretty heavily overcooked to the downside here going into tomorrow. So you know, I'm not going to be too quick to want to short this for two reasons. Number one, having that huge stochastic spike. Number two, because even though we don't really have the stochastic's not really in an uptrend at this point, you know, per se, because we're down below the 20-period exponential moving average. But still, when you're this overcooked on the stochastic, typically we're expecting a pop back up. And today was such a wide range day. You typically on day number two look for some sort of small retracement back to the upside. So I won't be too quick to short going into tomorrow morning, but I'm going to be paying very close attention to this because some of my best trades come in this $95 to $100 level here. So we'll be watching that in the room tomorrow morning. As we look at gold, gold here, this is a great example once again of why we want to go ahead and trail stops. I was looking to see if we could get down below these recent lows, and it did do that and went down again about an additional 50 ticks and then went ahead and had a big reversal. This is why when you're trading these on overnight basis, for those of you that are trading the European session, for those of you that are trading the overnight sessions, always keep in mind that once you get those moving your direction there, you want to put a trailing stop. And in that class that I did for you guys the other day, I showed you some examples of how we look to actually do that, if you recall. Now at this point, what I'm going to be doing is looking to see if there's opportunities to play between some key support, well, they're falling resistance bands, and so looking to see if we can actually get up above the falling resistance band and play between the bands. That's about a 100 tick range, you know, back to the upside. So looking for reversions to the mean there and trade that. Otherwise, the next big move to the downside, of course, looking to break down below this dual band area. You've got some great momentum shift bars, two of them back to back there, spanned over the course of about 5 months. Man, if you could break that, that could be pretty ugly for gold. So we're going to be paying real close attention to that, as you can imagine. One other one I've been asked about here a lot in the last several days is Apple, about taking fresh long side trades. Gang, I'm not really interested in taking fresh longs in Apple today. First of all, because right now we're caught between the kill zone. We have falling speed lines while you still have underlying rising support and sideways support here. I don't like taking those trades there. Where I'm going to be looking for, you know, Apple, whether underlying instrument or Apple options plays to the long side, is when we have the longer term rising support levels up, but then we're also back above those all important speed lines there as well. Okay, so right now taking the trade down here, we're underneath, plus we got a negative divergence here, right? We've got us moving, you know, virtually sideways over here while my indicators are making lower highs. So not really interested in taking the longs there. Not that it can't ultimately go up from here, but that is not the kind of high probability trade that we're looking for. Option